I want to say hi, guys. My name is Bangs. I'm from South Africa. I've been trading for 3 years, 4 years, 5 years. I started trading from 2021, became profitable 2023. So I just want to show you, also teach you how I did it, and also I just want you guys to know that trading is not really that hard. It's just that people are trying to learn a lot of things. So what I'm gonna do right now is I just compiled a nice video for you guys, especially for people who are forex beginners. I hope that this video is gonna give you a lot of knowledge, because I don't want to lie to you. I'm not a teacher type. I can't go step by step with you trying to explain what a candle is. So I just gonna put this video here. It's probably like 20 minutes long. Please guys, enjoy the video and let me know what you think. And also don't forget to like, subscribe, and follow Reach FX. Follow $5 Reach FX. My name is Banks and I'm out.
Importantly, hit the notifications bell, as it goes a long way in supporting our team. So here's what we're going to be covering in this video. Starting with the charting software. To the left is your drawing tools. Lines are used for drawing trend lines and chart patterns. Geometric tools are used for drawing support and resistance zones. Your indicators are up here. To the right is where you have all the different currency pairs to watch for and trade. These are all the ones we look at, so add them into your trading software right now. This here is the asset you are looking at, and in this case, this is the dollar-yen currency pair. You can change your chart type up here. We use candlestick charts, which is these rectangle bars on screen. So here's how to actually read candlestick charts. Green candlesticks are bullish because price appreciated and went upwards for the time period. Red candlesticks are bearish because price depreciated and went downwards for the time period. This rectangle area is known as the candlestick body, or the real body. These lines that stick out above and below the candlestick body are known as the wicks, or shadows, or tails. For green candlesticks, the opening price is at the bottom of the candlestick body, and then the close price is at the top of the candlestick body. For red candlesticks, the opening price is at the top of the candlestick body, and the closing price is at the bottom of the candlestick body. The wick ends at the top represent the highest price point of the time period. The wick ends at the bottom represent the lowest price point for the time period. Now let's go through this right on the charts. This here is your time frame. Right now it shows 4H, which means every candlestick you see on screen represents 4 hours of time. This here to the right is the price of the asset at each level. So for example, this green candle here. Green opens below and closes above, meaning at the start of that 4 hours of time, it opens at this price here to the right and closes at this price here to the right. For this red candle here, red opens above and closes below, meaning at the start of that 4 hours of time, it opens at this price here to the right and closes at this price here to the right. Let's now show you how to use the risk reward tool. This long wick candle at a recent support level with 2 reversal points presented a long trade setup. You decide to enter long on this bullish momentum confirmation candle, meaning your entry point would be on the candle close here. To figure out your risk reward for this trade, on the left here, where it says forecasting and measurement tools, click long position. Then click on screen where you decide to enter the trade. Your entry here is this price here to the right. Your stop loss here is this price here to the right. Your profit target here is this price here to the right. Your risk reward is set to a default of 1-to-1. Let's say you risk $10 on this trade. When price hits your profit target here, you gain $10. If price were to go in the opposite direction and hit your stop loss, you would lose the $10 you initially invested. You risk 1 to either gain 1 or to lose 1. Now, let's say you want to set a risk reward of 1 for 2. When price hits your profit target here, you would gain $20, which is double your $10 initial investment. If price were to go in the opposite direction and hit your stop loss, you would lose the $10 you initially invested. You risk 1 to either gain 2 or to lose 1. Next, you need to follow economic events and news releases, as these create market volatility. To track economic events, click on the calendar here. And you'll see a list of all the economic events for today. Click this button here so that it filters your calendar to only show high impact events. This here is the time of the economic event releases. This here is the country and currency of the economic event. This here is what kind of economic event it is. This here is what was forecasted. And this here is what the actual released number was. So they either met expectations, which is neutral, beat expectations, which is a positive for the underlying currency, or they missed expectations, which is a negative for the underlying currency. Now, here is a list of the big economic event releases we look at, which heavily move the markets. FOMC meetings, which involves interest rate announcements for the US economy and gives insight into the state of the US economy and shapes monetary policy. This affects the dollar-crossed pairs. Non-farm payrolls. This measures the number of people employed in the United States minus certain groups, such as farm workers. This gives insight into the current economic situation and occurs on the first Friday of every month. CPI inflation, which is the consumer price index and measures changes in the prices of goods and services in the United States and reflects the purchasing power of consumers. Higher CPI means higher inflation and results in less purchasing power and less spending by consumers, while lower CPI means lower inflation and results in more purchasing power and more spending by consumers. Fed Chair speeches, which is speeches by the Federal Reserve Chair and gives insight into the central bank sentiment into things like interest rate decisions, as well as future monetary policy. European Central Bank, or ECB, meetings, which gives insight into the European economy as a whole and provides things like interest rates, similar to FOMC. This has an effect on euro-crossed pairs. PCE inflation, which is the personal consumption expenditures inflation and is what the Federal Reserve prefers to use for gauging inflation. Retail sales is data that gives insight into the spending patterns of consumers and helps gauge economic growth. Gross domestic product and GDP growth rates, which measures the total value of goods and services within an economy and gives insight into the health of an economy and its performance. Manufacturing Purchasing Managers Index, or PMI, which gauges the manufacturing sector and its economic activity through showing an expansion of production or contraction of production. Chinese data, meaning any economic data out of China, as they have a large effect on the world economy at large, due to their massive role within it all. Economic data releases can create volatility and large swings of price, which means potential larger profits, but also potential larger losses. Moving on to the next topic. Support and resistance. So what is a resistance level? When you look to the left, you notice price go up before it suddenly stopped in its tracks, changed directions, and went downwards drastically. This tells you that for whatever reason, this area is of interest to buyers and sellers, because once price got to the area, buyers decided to close their long positions and sellers decided to open new short positions. And that double action is what is required to trigger a drastic move in the opposite direction. A quick note. Whenever you hear us refer to buyers and sellers, we are referring to the big guys in large institutions who have the power and leverage to actually move the market. So, because there is buyer and seller interest at this area in the past, there might be interest at this area again once price returns to this area in the future, which presents trade opportunities. Now, what you do is you draw a rectangle zone from where the last reversal occurred and stretch it far out to the right. This zone acts as a reminder to yourself to look for trade opportunities once price reaches this area, such as right here, which presented a short trade opportunity. So what is a support level? When you look to the left, you notice price go down before it suddenly stopped in its tracks, changed directions, and went upwards drastically. This tells you that for whatever reason, this area is of interest to buyers and sellers, because once price got to the area, buyers decided to open new long positions and sellers decided to close their short positions. And that double action is what is required to trigger a drastic move in the opposite direction. You again draw a rectangle zone from where the last reversal occurred and stretch it far out to the right. This zone then acts as a reminder to yourself to look for trade opportunities once price reaches this area, such as right here, which presented a long trade opportunity. So what happens when price breaks through resistance? Price breaking through a key resistance level shows you are in a very strong uptrend with heavy bullish momentum. This old broken resistance level then transitions into becoming a new support level and presents pullback long trade opportunities to trade with the strong moving uptrend. So what happens when price breaks through support? Price breaking through a key support level shows you are in a very strong downtrend with heavy bearish momentum. This old broken support level then transitions into becoming a new resistance level and presents pullback short trade opportunities to trade with the strong moving downtrend. Now here's a very important concept. Always treat support and resistance levels as wide general areas. The reason most traders fail at using support and resistance is because they expect picture-perfect looking key levels and picture-perfect trade setups every time, but this is often not the case. Support and resistance levels and trade setups will often look imperfect because the market as a whole is imperfect. So you need to learn to trade within these imperfections, or else you'll miss out on 90% of the best trades. Now, there are actually many different types of support and resistance levels. Not all support and resistance levels are made equal. Different support and resistance levels have certain traits built into them that make them of higher quality. Let's now go through the different support and resistance high quality types and traits to look for. Type 1. A drastic steep reversal of price that moves a greater distance. Notice how once price got to this resistance level, you had a steep sharp drop downwards, not a slow gradual decline, and price moved a greater distance and not just a slight bounce off the area. Again, notice how once price got to the support level, you had a steep sharp rise upwards, not a slow gradual incline, and price moved a greater distance and not just a slight bounce off the area. From a price action standpoint, this shows that these areas are of high interest to the big guys as they opened and closed large orders, which is required to trigger such steep reversals of price that move a greater distance. Type 2. Multiple reversals and reactions of price. Notice how at this key level, price reacted and reversed off of it on 5 separate occasions, which shows that this level is of high interest to buyers and sellers as they took action at the level time and time again. Type 3. Swing highs and swing lows. These touches here give you your standard key level. These touches here give you another standard key level. These reversal points at the top here give you your swing high level, as it is the highest point that price has reached in recent time. Swing high levels are high quality because they represent areas where price is deemed very expensive, which results in buyers often choosing to close out their long positions at these areas. These reversal points at the bottom here give you your swing low level, as it is the lowest point that price has reached in recent time. Swing low levels are high quality because they represent areas where price is deemed very cheap, which results in buyers often choosing to load up on the asset as a value buy at these areas. Type 4. Acted as both support and resistance. Notice how this key zone here acted as resistance here and support here. Just like multiple reactions, it shows that both buyers and sellers took action at the level on many separate occasions and on both sides of the level. Type 5. Visually obvious. These are the levels that you can spot right away within seconds of looking at a chart. They are visually obvious and jump right out at you and are known as major levels. These small bounces still give you a level, but it is known as a minor level. The easier to spot and visually obvious levels are the ones everyone can see, meaning there are more eyes on the level, which results in more action takers at the level, especially the big guys. Type 6. Recently respected test. So finding this type of level requires 3 steps. Step 1 is to find the point where the key level originated. Step 2 is the key, which is to look for a recent reversal off the same level to show that it is valid and respected during this current time period of the market. Essentially, you are letting the market test the level to see if it is valid before you use it. Step 3 is your trade setup area, and you go into this trade with confidence, as your step 2 recent reaction tells you that this level is still bringing in interest from buyers and sellers during this current time period of the market. Type 7, stacking high quality types and traits together. Evidently, a lot of the types and traits we just covered will overlap with each other, which is a good thing. The more overlap there is, the higher the quality of the key level and key zone. This level at the top here is a swing high level. It has multiple reactions, a drastic move away, and is visually obvious. This next level here acted as both support and resistance, multiple reactions, drastic move away, visually obvious, and it had a recently respected test. This level at the bottom here is a swing low level, multiple reactions, drastic move away, visually obvious, and had a recently respected test. Drawing support and resistance through applying wide zones. So you want to draw your resistance levels to this area above price. Using the traditional methods, this reversal point here is one level drawn. These reversal points here is another level drawn. These reversal points here is another level drawn. Now, the problem with drawing so many separate levels close by together is that it creates confusion and analysis paralysis, as you don't know which level to use for possible short trade setups. So what you do is, instead of drawing in all these separate lines, draw a wide zone instead that captures the entire area. And then you look for reversal price action in the general area for possible short trade setups. Let's show this again. These swing high reversal points draw a wide zone like this. These smaller reversal points draw a wide zone like this. These many reversal points draw a very wide zone. Then your swing lows down here, another wide zone. Let's show this again. So a question you probably have: how far back should you go to draw in your key levels? You always want to try to use recent key levels close to where you are currently, like these here. But now, once price breaks through the swing high, you have entered uncharted territory without any recent key levels in sight. This is then when you would zoom out and look a bit further back to see if there is a key level, which you have through this reversal point and level here. Once price hits the level, you had a candle color change and a bearish momentum candle, which means you can use this as an exit point or for a short trade setup. Moving on to the next topic,